All right, let's get right into it. We are looking at IRES Energy, ticker IREN. As of this exact moment, the stock is trading live at $7.82, which is up 27 cents on the day, a solid move of 3.59%. Now, the immediate assumption, the expectation that nearly everyone has when they see this ticker pop up on their watch list, perhaps on their Fidelity mobile app or the Robinhood app, is that Bitcoin must be having a good day. And that's not wrong. The correlation is undeniable, and Bitcoin is indeed showing strength. But if that's all you're seeing, you are missing the entire plot. The common belief is that IREN is just another Bitcoin miner, a simple, leveraged proxy for the underlying asset. You buy it when you want crypto exposure with a kick, and you sell it when the crypto winter winds blow. It's an easy story, one that's been told for years about this entire sector. The reality, however, is that IRES Energy is rapidly becoming one of the most complex and fascinating transition stories in the market. That 3.6% pop today isn't just about Bitcoin. The market is slowly, and I mean slowly, starting to wake up to the fact that IREN is executing a massive pivot. They are aggressively building a second and potentially far larger business on top of their mining infrastructure. They are not just a Bitcoin miner anymore. They are in the early stages of becoming a specialized, high-performance compute provider for the AI sector. Their recent announcements, including another significant purchase of NVIDIA's top-tier H100 GPUs, the very hardware that makes NVIDIA stock one of the most valuable in the world, isn't a side quest. It is a fundamental shift in the company's entire thesis, and it changes everything about how you must analyze it. Let's break down the recent stock movement, because it has been a trader's paradise and a long-term investor's headache. This stock does not trade with the gentle sways of an Apple stock. It has extreme volatility. We've seen it carve out a rough support level around the $6.75 mark over the last few weeks, bouncing off it with significant volume. Today's move is pushing it up against a key resistance level near $8. If it can break through and hold, the technical picture gets much more constructive. The trading volume today is already pacing significantly above its 30-day average. This isn't just retail traders hitting the buy button on their Fidelity mobile app. This suggests larger block trades, a sign that institutional desks are paying attention. Why? Because when you look at the filings, you're starting to see different kinds of funds, not just crypto-focused hedge funds, building positions. Tech-focused funds are sniffing around. They're not doing this for a Bitcoin proxy. They're doing it because they see a company that has already solved the hardest problem for both Bitcoin mining and AI, securing massive amounts of low-cost, sustainable energy. The last earnings report was a perfect illustration of this expectation versus reality gap. The street was laser-focused on the typical metrics: cost to mine a coin, total hash rate, Bitcoin holdings, and IREN's numbers were solid. Their focus on 100% renewable energy isn't just an ESG-friendly marketing point, it's a core economic advantage that gives them access to stable, low-cost power, which is absolutely critical in the post-halving environment where mining rewards are slashed. But the real story was buried in the capital expenditures line. The spending was high, and it worried some analysts who were only running the Bitcoin mining model. That CapEx wasn't just for new mining rigs. It was for the AI hardware. This is the investment phase of the new business, and it is expensive. It's a drag on the current quarter's profitability, and it absolutely spooked the pure mining investors. This is why automated investment help tools like Schwab Intelligent Portfolios will likely never touch a stock like this. The metrics are too complex and forward-looking. This is a stock that requires active online investing, not a passive approach. So, for those who are new to the name, what does IRES Energy actually do? At its core, IREN is an Australian company that builds and operates institutional-scale data centers. Their entire strategy from day one was to hunt down locations with access to massive amounts of cheap, 100% renewable energy. Think hydro and wind. For its first few years, the business model was beautifully simple. Plug in Bitcoin mining rigs, ASICs, and convert that cheap power into digital assets. It was a high-margin, effective, but incredibly cyclical business completely tethered to the price of a single, volatile asset. Now they are taking sections of those data centers, funded by the cash flow from Bitcoin mining, and installing racks of these high-end NVIDIA GPUs. They are then renting that compute power out to companies developing large language models, running complex AI simulations, and building the next wave of generative AI. This is a totally different business. The customers are different, enterprises, not the blockchain. The margins are different, potentially more stable and higher, and the competitive landscape is totally different. This pivot is smart, but it's not a guaranteed win. This is what separates simple online investing from a deep strategic analysis. When you're browsing investing sites, IREN might still be categorized as financials or technology. The truth is, it's becoming a hybrid. This is where investors using platforms like SoFi or interactive brokers need to be rigorous. The SoFi investing platform, for instance, offers both SoFi stocks and SoFi ETFs. And you need to understand that IREN is not a diversified SoFi robo-advisor play. It's a concentrated bet. When you look at your individual brokerage account, whether it's with Fidelity or a platform like Robinhood that offers both Robinhood stock trading and Robinhood crypto, you have to be crystal clear on why you own it. Are you owning it because you think Bitcoin is going to $100,000, or are you owning it because you think it can become a niche player in the AI cloud market? This isn't a stock for a standard Fidelity wealth management plan unless it's in a highly speculative sleeve. But for an active trader using the Fidelity trading platform, the data is fascinating. You can chart IREN against BTC and against NVIDIA stock, and you'll see its correlation beginning to shift ever so slightly away from Bitcoin and more towards the tech sector on high-volume days. The Interactive Brokers platform, with its advanced charting and data, is ideal for this kind of deep dive. And while Interactive Brokers' fees are geared towards active professional-level trading, the rise of Robinhood fractional shares means even smaller investors can take a position in a high-risk, high-reward name like this, rather than just sticking to Fidelity mutual funds. This is the definition of self-investing. You must do the work. So, looking ahead, the future for IRES Energy is a distinct two-path scenario. Scenario 1 is the bull case, the one that gets investors excited. In this version, Bitcoin continues its upward trend, providing a powerful cash flow engine. This mining revenue fully funds the entire AI cloud expansion without IREN needing to dilute shareholders by issuing more stock or taking on crippling debt. The market, in turn, recognizes this pivot and begins to re-rate the stock, shifting its valuation from a low-multiple Bitcoin miner to a high-multiple AI infrastructure company. This is the dream. This is how you get a 10x return. This is the Tesla stock story, using one profitable business to fund the next, potentially larger one: autonomy, energy. Scenario 2 is the bear case, the squeeze. In this version, Bitcoin's price stagnates. The post-halving mining economics get brutal and margins collapse. The Bitcoin mining cash cow dries up. But IREN is still on the hook for its expensive AI hardware contracts. They are forced to raise capital at the worst possible time, either taking on high-interest debt or issuing a flood of new shares, crushing the stock price. Meanwhile, the AI cloud business, which is still new, struggles to gain traction against massive established competitors. In this scenario, the stock is hit from both sides. The crypto bulls sell, and the AI bulls never find a reason to buy. The reality, as always, will likely fall somewhere in the middle. The key catalyst to watch for in their next earnings call is not just the Bitcoin mined. I want to see one number: AI cloud revenue. I want to know the margins. I want to know if they are signing long-term contracts or just selling spare capacity